Hey, listeners, are you ready to take control of your car buying experience and make smart financial decisions? Introducing the Ultimate Auto Finance Guide, your go to resource for navigating the complex world of auto finance. Whether you're a first time buyer or looking to refinance, this guide has all the tips, tricks, and insider knowledge you need to secure the best deal. Don't miss out on this opportunity to empower yourself and drive away with confidence. Head over to www.ultimateautofinanceguide.com now and grab your digital copy. Trust me, it's the smartest investment you'll make before buying your next car. Welcome to Drive to Success, Master in Auto Finance. I'm your host, John Lewis, and today we're tackling a question I get constantly. Should I finance through a credit union, and how do I know it's safe? Here's the thing. Most people focus on the interest rate, and yes, that matters. But if you're locked into a 6-year loan on a $35,000 vehicle, there's something else you need to understand first. The safety and stability of your lender. That's where the National Credit Union Administration, the NCUA, comes in. And by the end of this episode, you'll know not just what it is, but how to use that knowledge to save thousands of dollars and avoid some common financing mistakes. No fluff today, just practical guidance, real numbers, and a framework for choosing the right credit union for your situation. The NCUA is a federal credit agency created in 1970 to regulate and insure credit unions. Think of it as the FDIC for credit unions. It insures your deposits of up to $250,000 per account holder through the National Credit Union Shared Insurance Fund. But here's what most people miss. NCUA insurance isn't just about protecting your savings account. It's about ensuring your lender stays solvent while you're paying off a 60 or 72-month loan. Why does this matter to auto buyers? Imagine you're 3 years into a 5-year loan when your credit union faces financial difficulties. What happens? With NCUA insurance, your deposits are protected up to $250,000. The NCUA steps in to merge the troubled credit union with a healthy one or facilitates an orderly resolution. Your loan terms remain intact, same rate, same payment schedule. You experience minimal disruption. Without it, you could lose access to your accounts during a critical time. Your loan could be sold to a less favorable lender, and you have no federal safety net. The NCUA also regularly examines credit unions for fair lending practices, which means you're less likely to encounter predatory terms or hidden fees that sometimes appear in dealership financing. Bottom line, when you choose an NCUA insured credit union, you're not just getting a loan, you're getting federal oversight and protection. Okay, everyone says credit unions have better rates, but what does this actually mean for your wallet? Let's use a real world example based on the current interest rates from October 2025. Let's say you have a $30,000 vehicle on a 60-month term, and if you use a bank rate of 7.19%, your monthly payment would be $598, and the total interest of the life of the loan paid would be $5,880. Now, let's say you take the same vehicle, same term, and use 5.25%. That's roughly 2% lower. Your monthly payment would be $570, and the total interest paid over the life of the loan is $4,171. You save $1,740 over the life of the loan. That's nearly 3 months of car payments. And here's what's important. These are October 2025 rates. The Federal Reserve has started cutting rates, and we're still in a high rate environment compared to a few years ago. That makes finding the best rate even more critical. So beyond the rate, here are some key advantages for using a credit union. First, you have lower to zero fees. Many credit unions do not charge loan origination fees. Banks often charge $100 to $500. There are no prepayment penalties, so you can pay off early without penalty. You have lower late fees, typically $25 versus $35 to $50 at banks. Next would be flexible underwriting. Credit unions look at the whole picture, not just your credit score. And this is huge if you're self employed with variable income, a first time buyer with a thin credit file, or if you're recovering from a past financial setback. I've seen credit unions approve loans for borrowers with credit scores as low as 650 at competitive rates, while banks automatically refer them to subprime lenders, which offer rates of 12 to 15%. Next, credit unions are member focused and they offer member focused service. And this is because credit unions are nonprofit cooperatives owned by the members. They're not trying to maximize profits. This often translates into faster loan decisions, more direct communication, willingness to work with you if financial difficulties hit you. But credit unions aren't perfect. Let's be honest about the downsides. First, you have smaller branch networks, sometimes slower technology adoption, membership requirements that can be restrictive. Not every credit union specializes in auto loans. When might banks or dealer financing be better? If the manufacturer is offering zero APR promotional financing, if you need same day approval and funding at the dealership, if you don't meet any credit union membership requirements in your area, that's where that comes in handy. Not all credit unions are created equal. Here's how to evaluate your options strategically. Check eligibility first. Credit unions have membership requirements, and here are several common categories: geographic, employer based, association based, and family based. So, geographic, if you live, work, or worship in a specific area. Employer based, if you work for a specific company or industry. Association based, you can join a partner organization sometimes for as little as $5. Family based, if an immediate family member is already a member, that you can join. Here's a pro tip. Some national credit unions like PenFed and Alliant have straightforward membership requirements. Sometimes just making a small donation to a partner charity means you can join that credit union. Step 2, compare these key factors. For new car loans, ask, what's your current APR for new vehicles? Let's say at 36, 60, and 72-month terms. Are there any loan origination fees or prepayment penalties? What's the maximum loan term you offer? Do you offer gap insurance and at what cost? And for used car loans, ask, what's your APR for used vehicles, 1 to 3 years old versus 4 to 6 years old? What's the oldest model you'll finance? Do you have a maximum mileage restriction? And do you offer extended warranties through the credit union? For your situation, evaluate, can I get pre-approved with only a soft credit inquiry? What's your average loan approval timeline? Do you have a mobile app with loan management features? Can I make extra payments or pay bi-weekly without fees? Step 3, understand the geographic strategy. I'm going to share something most people don't consider. You don't have to use a local credit union. Many of the best auto loan rates are offered by credit unions with national membership and digital first operations. However, if you value in person service or you want to build a long term banking relationship, local is better. So, when to choose local? If you want face to face service, if you're buying from a local dealer who has established relationships, and if you value community connection and supporting local institutions. when to choose a national credit union, if you prioritize the lowest possible rate, if you're comfortable with digital banking, and if you're willing to handle everything online or via the telephone. So instead of rattling off 10 names, let me provide you with 4 excellent options for various situations. All are NCUA insured and have strong track records. Option 1, PenFed Credit Union, Pentagon Federal. It's best for low rates and nationwide access. Current rates are often among the lowest nationally. Check their website for current APR. And they're open to anyone. You just need to join by opening a savings account. They have strong digital tools and a mobile app. And they offer car buying services and pre-negotiated dealer pricing. Membership is open to all. It's a $5 deposit to join. So it's a best fit for rate shoppers and those who are comfortable with online only banking and first time buyers. Here's option 2, Navy Federal Credit Union. It's best for military families and service members. They have over 13 million members, which makes them the largest credit union in the U.S. They offer competitive auto rates with specialized programs for the military, extensive branch network on and near military bases, and they offer excellent customer service. Membership would be for military members, veterans, Department of Defense employees, and their families. And it's a good fit if you're eligible. This should be your first stop. Option 3, Alliant Credit Union. And this is best for fast approvals and refinancing. They have a nationwide online credit union, rapid digital application and approval process, strong refinancing rates. It's great if you're stuck in a high rate loan, and there's no monthly service fees. For membership, it's easy to join, usually through a partner organization with a small donation. And it's a best fit if you need a quick approval or if you need to refinance and if you're comfortable with digital banking. And the last option would be your local community credit union. It's best for personalized service and flexible underwriting. Look for, if you need face to face service, a local credit union would offer more flexibility and they have many partnerships with local dealers, and it's easier to resolve issues in person. So membership requirements vary by location. This would be a good fit if you're self-employed with credit challenges and if you value in-person banking. To find local options, visit ncua.gov and use their credit union locator tool. Filter by your location and look for institutions with strong auto loan programs. Here's the most important tactical advice I can give you. Get pre-approved before you set foot into a dealership. And here's why this matters. When you walk into a dealership without financing arranged, you're negotiating from a position of weakness. The dealer knows you need financing and they make significant money on financing markups, sometimes more than on the vehicle itself. But when you arrive with a pre-approval letter from a credit union showing a 5.5 interest rate, suddenly you have leverage. So here's what the pre-approval process looks like. First, apply to 2 to 3 credit unions within a 14-day window. Credit unions count multiple auto loan inquiries within a 14-day window as a single inquiry. This lets you shop rates without tanking your credit score. Second, request a soft inquiry pre-qualification first. Many credit unions can give you a rate estimate without a hard credit pull. Once you choose your top option, then do the formal application. Third, get your pre-approval letter. This shows the maximum amount, interest rate, and term you're approved for. It's typically valid for 30 to 60 days. And last, at the dealership, let them try to beat it. Show your pre-approval. Say, I already have secured financing at 5.5% for 60 months. If you can beat that rate, I'm interested. Otherwise, I'm using my credit union. Sometimes dealers can beat it with manufacturer incentives, but you set the tone and you set the floor. So, what about dealer incentives? This is important. Sometimes dealer financing is the better deal. If the manufacturer is offering 0% or 1.9 APR promotional financing that beats any credit union, just make sure that there's no markup on the vehicle price in exchange for the promotional rate, and that you're not sacrificing a larger cash rebate that would save you more money, and that there are no hidden fees or extended warranties bundled in. Now, let me help you avoid 4 common mistakes. Mistake number 1, focusing only on the monthly payment. Dealers love to ask, what payment can you afford? Then they stretch the loan to 84 months to hit that number, but you'll pay thousands more in interest. Instead, focus on the total cost. That's the vehicle price plus interest, and keep terms at 60 months or less if possible. Here's mistake number 2, not reading the fine print. Some credit unions charge fees for paper statements, fees for insufficient funds that are higher than you can expect, and require direct deposit or minimum balances for the best rates. Always ask what's required to get this rate and what fees might apply. Here's mistake number 3, ignoring the membership requirements ongoing. Some credit unions require that you maintain membership through a small savings account balance or other requirements. Factor this into your decision. And here's mistake number 4, assuming all NCUA credit unions are the same. NCUA insurance guarantees safety, but it does not guarantee good rates or service. You still need to shop around and compare. Here's what to do this week if you're shopping for a car. Monday to Tuesday would be your research phase. First, visit ncua.gov and verify that the credit unions you're considering are federally insured. Second, check your credit score. Go to annualcreditreport.com. It's free. Third, identify 3 to 4 credit unions you're eligible to join. 4, review their current auto loan rates online. So from Wednesday to Thursday would be the application phase. First, request a soft inquiry pre-qualification from your top 2 to 3 choices. Second, compare the offers, APR, terms, fees, and requirements. Third, submit the formal application to your top choice and then the backup. On Friday through the remainder of the weekend, receive your pre-approval letter. Now you're ready to shop for vehicles with financing already secured. And last, let dealers compete against your credit union rate. Remember, your auto loan is likely the second largest financial commitment you'll make after a mortgage. Taking a few extra days to secure the best financing can save you thousands and give you peace of mind through NCUA protection. That's it for today's episode. No fluff, no filler, just a practical framework for using credit unions and the NCUA insurance to your advantage when buying a car. Thanks for joining me on this episode of Drive to Success Master in Auto Finance. If this episode helped you understand how to approach auto financing strategically, share it with someone who's car shopping. And until then, keep driving towards success.
Rolling down the avenue to a jazzy beat, following that rhythm, life's a one-way street. Chasing dreams with passion, every mile's a goal. In the world of finance, stories to be told. Catching the horizon with a soulful groove. Navigating numbers, got nothing to lose. Every calculation, every deal we sway. In the realm of autos, we find our way. Drive to success, we're mastering the art. Through the lanes of finance, we set apart. Jazz and soul, where the numbers align. Make your journey smooth with wisdom divine. Hit the keys of knowledge, let the insight play. From leases to purchases, every savvy way. Revving up those engines, zeros turn to ones. In the studio of life like morning sun. Feel the soul, embrace the jazz. In the auto world, let's razzmatazz. Financial gears shifting smooth and slick. In the podcast lane, we find the tricks. Cruising through the jargon, ain't no mystery. Unlocking all the secrets in auto history. Low ones and rates, they glisten like the stars. Drive the distance, no matter how far.
Thanks for sticking around until the end. Before we go, if you're in the market for a new or used car or even thinking about it, you must check out Drive to Success, the ultimate auto finance guide. It's packed with strategies to help you navigate the tricky world of auto financing, avoid costly mistakes, and get the best deal possible. Head over to Amazon and grab your copy today. Just search for Drive to Success, the ultimate auto finance guide, or use the link in our show notes. Take control of your car buying experience and drive away with confidence.